Welcome to Investors Insights, where today's topic is changes coming, ? A lot to cover this week, a very important week. We get a jobs report, we get big tech earnings coming out, and also an update from the Fed. So very important week. I'm going to talk about potential market pullbacks. Ty is going to give us an update on the Fed. But first, Trey, talk about the Treasury and the changes coming potentially with the Treasury and also the importance of the Treasury. Talk about that.
Yeah, thanks, Bobby. So all eyes will definitely be focused on the Federal Reserve this week, and rightfully so. It's a very important announcement, and Ty's going to get into that in more detail. But what's not as covered is the Treasury's quarterly announcement of how they're going to fund the government for the next 3 months. They will announce this week how much they're going to borrow and in what form. And it's that what form that is so important, because they can decide to borrow in 3-month Treasuries, which means they'll be back here again in 3 months, 1 year, 2 year, 7 year, 10 year, 30 year, and so on. That's what's so important. And the markets have proven how important that is. Last year at this point, the Treasury announced that because interest rates had fallen to around 4% on the 10-year Treasury yield, that they were going to issue more long-dated debt. And the markets liked that at first. However, there wasn't demand for that long-dated debt. So we saw interest rates on 10-year Treasury spike from below 4 to above 5. We saw the S&P 500 dip over 10% in that 3-month period. And then in October, they had to turn completely around, and they, good for them, they listened to the market, but they said they weren't going to issue any more long-dated debt. They're going to issue short-term debt. And what happened? We saw the 10-year spike down, and we saw the market have a massive rally to close the year. And so what the Fed decides today, or the Treasury decides this week, will play out between now and October and have a massive impact on markets. And the Treasury knows that. They're sitting on around $700 billion in excess capital. So that's the money they have at their bank account. So when the Treasury spends, federal government spends, they can fund it from tax revenue, they can fund it from borrowing, or they can spend down their savings account. Now, obviously, the savings account can't go below zero, but with them sitting on $700 billion, they have a lot of leeway on how they're going to fund the next 3 months. And their announcement this week, they have to be very transparent to markets. It's going to tell us a lot of how the fall is going to go. And it times very well, good or bad, with the election. So they're going to have a lot to say this week. And we're going to be watching it very closely.
Yeah, and also there continues to be concern around valuations. And with the market having one of its worst days of the year last Wednesday, we want to address valuations and market pullbacks. And one thing we look at when analyzing trends and volatility is where the S&P 500 is compared to the 200-day moving average, which is a technical indicator that helps us kind of determine long-term trends in the market. And we have seen the S&P 500 stay above the 200-day moving average and at a higher premium for what we consider now to be an extended time period. So it wouldn't be surprising to see some pullbacks like we saw last Wednesday. And one way to kind of look at the market in relation to its long-term moving average is to think of a rubber band. So price generally only stretches so far above its long-term average before eventually pausing or snapping back. The good news is that looking at this chart, pullbacks should be expected, but even with pullbacks, the market could continue its positive trend. So looking at this chart, you can see in the average pullbacks in the orange columns that show at current premiums of the market, it's normal to have pullbacks over the next 1, 3, 6, and 12 months. Even with these pullbacks, though, you can see that the average returns in the blue columns are all positive. No guarantees. But with it being an election year and with where the market is in terms of valuations and relative to technical indicators, pullbacks should be expected, but average growth of the market can remain positive. So, Trey has addressed the issues around the importance of the Treasury. Big week for the Fed. So talk about the Fed.
Yeah, so of course the Fed meets this week. We're not expecting a cut. There's only about a 5% chance, according to the CME Fed Watch tool, of a cut. So we expect a pause. But that, what's going to be important is their language moving forward. And so right now it's widely expected that we're going to have a cut in September, and then probably again November, and probably again December. Now, of course, these have changed in the past. We've expected cuts, and then as we get closer to time, reading the previous calls and hearing from Fed officials, we've kind of changed that thesis. But right now, it's widely expected that at least September is going to have a cut, and so that kind of brings us back to this chart that we've shared a few times. But as you can see, stocks do well in a pause environment. And so in this chart, usually on average, it's about 100 days from the last Fed rate hike to the first cut is when the market kind of makes their highs. We, of course, in this chart, we're not labeled yet because we're still in this ongoing cycle. But we would be, in this kind of top right over here by 2006, 2007 kind of time frame with the strong performance and how long it's taken to reach the high since the pause. The pause was about a year ago. July 26th was the last time that the Fed hiked rates. Now, if we're coming into an easing cycle, that a lot of people kind of interpret that as positive for the market, but it really just depends why we're easing. And so a lot of times we're easing because market conditions get worse, the economy gets worse. And so as you see here in this chart, cuts really haven't been good for the market. If you see days from the first Fed cut to the market low, there's a pretty decent sized pullback to Bobby's point. And so that's something that we certainly want to keep an eye on. And, even in pullback scenarios, certain things in the market are working well. So, we're going to keep an eye on it and try to rotate to those areas, but something that we certainly want to watch.
Yeah, so there are potential changes coming to the Treasury, to the Fed, and we're going to be analyzing to see what impact they will have on the market. So a lot going on. Very important week for the market. We'll continue to keep you updated. Thanks for watching.